The Naira has faced weighty volatility over the years. Since the 1980s, Nigeria's currency has experienced repeated periods of depreciation. Recently, we have noticed the frequent fluctuation in the Nigerian Naira, its ups and downs against other currencies, especially the US dollar. For example, after the 1986 liberalization, the Naira fell from about 22 Naira per dollar to over 90 Naira by 1999. It continued to weaken, reaching around 192 Naira in 2015 and then sharply devalued to 305 Naira per dollar in 2016, following a global oil price crash. Why does this happen? Nigeria's economy depends heavily on oil exports, which brings in foreign currency. When oil price drops by 25% or more, the Naira typically loses value within 3 to 6 months as Nigeria's foreign reserve shrinks and demand for dollar rises. In 2016, the Naira lost about 35% of its value against the dollar. And again, in 2020, during the COVID-19 pandemic, it fell roughly 24% as oil price plunged. Fast forward to 2024 and 2025, the Naira has seen some sign of stability. In early 2024, the Central Bank of Nigeria adjusted the official exchange rates, causing a devaluation of about 34% in official markets, from roughly 988 Naira per dollar in January 2024 to about 1,505 Naira by June 2024. The parallel of black market rate dropped from about 1,200 to about 1,520 Naira per dollar over the same period. Variation in both official and parallel markets is caused by market segmentation and forex restriction. However, since then, the market has begun to stabilize. The official exchange rate now hovers around 1,550 to 1,600 Naira per dollar, while the black market is around 1,600 to 1,650 Naira per dollar. This narrowing gap between official and parallel rates signals improved market confidence. The CBN governor recently announced that foreign exchange market volatility has sharply dropped from over 4% a year ago to below 0.5%. This means the Naira's value is not swindling widely as before. Several factors contribute to this improved stability. The central bank has liberalized the forex market, unifying exchange rates and enhancing transparency, which has helped reduce speculative pressures. Increased dollars inflow from remittances, oil exports, and international support like the World Bank's $750 million disbursement has boosted foreign reserve as well. CBN has maintained a tight monetary policy to control inflation and stabilize the currency, for example, by raising interest rates. The Nigerian government has spent about $8 billion to support the Naira and keep it stable via its central bank forex intervention. Aside from oil, there are issues like inflation rates, government debt, and political stability, which also affects confidence in the Naira. With different policies being put in place from time to time to curb volatility, such as encouraging currency exchange through reputable banks or authorized dealers to avoid scams and unfavorable rates on the black market. Investing in inflation-protected assets like real estate or government bonds, which helps keep pace with inflation. The Naira has had a turbulent history with sharp devaluation linked mainly to oil price shock, amongst other factors. Although the currency is now showing signs of stability, challenges may remain around our currency, but Nigerians can protect themselves by staying informed, using official exchange channels, and diversifying their assets. Staying financially informed by following us on all social media platforms on Fact News Africa and Fact News Hausa.